is this. The biggest lesson that I had was I sat back and I learned. I was not a vocal person in 2017, early 2017, especially on cryptocurrency. Even the end of 2016, when I first bought Bitcoin, no one had a clue what it was, and I only bought a little bit of it. Not much at all, because I didn't really understand it, and that was probably an error of judgment of mine as well. But once I learned more about it, and I started accumulating more, it was time to actually buy altcoins when I thought about it, when I looked at it, because... Hey everyone, welcome to today's video. I hope you're good. Friday, yes! If you're new to crypto, you'd like to learn more, hit the subscribe button, press that bell button and smash the like button, please. Be nice. Market's crap. Yeah, let's go for it. So, I want to talk about investing versus trading. Now, I've pissed a lot of people off recently, I don't care. I do both. I like to invest and I like to trade. I don't like people who are 100% traders because I just don't believe it's kind of the thing. You've got to think of your future as well. You've got to think that trading is active income. You've got to think investments work for you. That's kind of where I'm going with this. So I want to go through. If you're new to crypto, you might enjoy this because I'm going to go through what happened to me in 2017, the bull run. I want to show you 4 screenshots, which was 4 months. Wow. And that is true money working for you as investments. Now, I will say this. This may never ever happen again. I will also say this. I was lucky in when I bought and what I did with that money. I've also documented it in my course so people can learn from it. Understanding how to research, understanding the fundamentals. If they change, you should also change your portfolio, essentially. Knowing what to do, how to compound those up, and how to obviously keep them nice and secure. Now that brings me on to something as well. Ledger have sent me a Nano X. It's coming today. I will be doing a review on that, a new product, the newer version of it. I'm a bit late to the party, but they actually sent me one, which was nice of them because I've actually bought quite a few in the past, the old ones. Yay. But yeah, I want to talk about investing first, and I want to talk about trading. The total chalk and cheeses between both of them, how they both work, and why you should separate them completely. So, image number 1. This was literally in October. I was in America at this time. Yeah. I invested a little bit in BTC back in 2016. Nothing really happened that much. I was playing around with it. I was learning how to trade it. I was learning how to do bits and bobs. And I was literally for a year just learning. Literally learning. That was it. I was learning how to trade it, learning about other cryptocurrencies, learning about the blockchain, learning about everything. That's the whole paramount of investing. You need to learn what on earth you're buying. People don't do that. I don't know why. But I was then going through a period of time in my life where I was moving from job, location, I was in the military, and I was also moving into this house. Didn't really do much in terms of trading, but what I did do is I learned how to invest in altcoins. Now, the coins on here, do not buy them. It's old. You know, one of those things. But ultimately, I remember very, very vividly using Poloniex, laying on the floor downstairs, buying coins with my missus, random shit. But over time, I learned and I learned and I learned, and I saw the potentials in certain coins due to hype and fundamentals. Hype marketing is key. A lot of people bought Tron when it was low. They also sold it when it was high. People that bought it at the top got burned. Now, the second image I want to bring you up to is this one. That was a month later. I bought a load of Ethos. That was getting hyped up quite a lot. I had Club Token from random mining contract that I bought ages and ages ago, which I really wasn't that interested in at the time. I got given it. Cool. But I also bought this Elex coin, Elixir or whatever it was called. It's now gone bust, but that was one of my best performing coins. Hype marketing. It was because everything was doing well with lending at the time. BitConnect, obviously. But that wasn't that sort of coin. It was kind of like the first ever decentralized finance sort of element out back before it was regulated, and it's gone totally corrupt and bust now, but who cares. You'll see in the next bit, in the next coming screenshots, how well it actually did. I actually bought Electronium. Yeah, cool. Back then I was excited by it because it was all to do with gaming. They've obviously changed that, fundamental change, and I binned it at like roughly that sort of price, about 13 cents I think it was, so maybe about 10 cents because mine's in UK pounds. And I had some other crappy coins as well, but that was literally, that was me getting my value of Electronium that day, as you can see by the 24-hour change. So that was my portfolio got bang, because the ICO price that I got it at and the price that it changed massively changed. Next one, the month later, it was pretty crazy. I still had a load of hold of Electronium. You can see how I bought more Elixir as well there. I had Ethos, that was doing very well. Substratum, that's gone to shit. Power Ledger, QSP. These, obviously you can see where I went with these. I followed the YouTubers. I was following the hype in the industry, the altcoin boom, and everyone hyping everything up because everyone was hyping it and they were buying it. I just bought it. Easy. Because I bought it low, and I bought it low at the correct point. I understood averaging down. I understood buying the dip properly. Not many people do, and they do it in the wrong market. If you do it in a bull market, it's perfectly fine because they will correct naturally. The buyers are still there. When you go the other side, though, in the bear market, you're buying these dips, right? The buyers aren't there, the sellers are there, and it goes even further. So you've got to remember that. That's why I teach people how to do it. I've still hold VeChain. I sold a load of VeChain back ages ago. I've still got some, and I'm going to talk about VeChain in a bit. But it's doing very, very well. But this was my all-time high. This was in about the 8th or 9th of January. Every screenshot you've just seen there was a month. Unbelievable. And I say this again, this may never ever happen again. And a lot of these coins that I held and had hold of were crap, were bollocks in terms of certain things that they had. They were not that good. They were not that good at all. Some of them were brilliant. Look at the likes of Ethereum. Did well. I had a lot of Ethereum back then. It was quite nice. But the number one there is a coin that's gone bust. So always remember, guys, take your profits. Do well. Now, in terms of that, dollar cost averaging is key. You've got to do it. If you bought these tops, these little cliffs, it's understandable. It happens. You know, you can't get away from that. And ultimately, I'm now onto the screen with VeChain. Looks brilliant, doesn't it? But people do buy up here. I bought down here. I averaged down at 43 Satoshis, as you can see by this image here. Not bad. The reason why I did it was because the news was getting quite bullish on VeChain. I also held VeChain for a long time. I had a load. I sold a load in profit. I left a load just sitting there because I quite like it. I like VeChain a lot. So I just held it for long term. I averaged down. I'm now 104% up on that investment, essentially, which is pretty cool. And that little average down, which has brought down its profit margin quite nicely. So that's good. But when you look longer term, it still doesn't look good. It's still a long way to go, and we need to keep going. We need, keep going. Off it goes. Happy days, nicely. So, dollar cost averaging is key. Buy low instead of buying high. Simple as that. When they're on the floor, long as those fundamentals have not changed, crack on. But I want to get onto trading as well, because it's key to understand a few things. You need to keep them separate. You cannot have a load of BTC and then trade it. It doesn't work. You've got to have a trading pot and an investing pot. You've got to make your money work for you in the background when trading doesn't go well for you. If you went long on a trade and it went against you, okay, it happens. But at least you've got a lot of investments there that could be working for you in a different way. They could be going up, they could also be going down. Remember that. There's also different things as well, such as decentralized finance you can get involved in. There's staking as well, so you can make a little bit of passive income if you so wish to, as you are trading. But what I will say is this. The biggest lesson that I had was I sat back and I learned. I was not a vocal person in 2017, early 2017, especially on cryptocurrency. Even the end of 2016, when I first bought Bitcoin, No one had a clue what it was, and I only bought a little bit of it. Not much at all, because I didn't really understand it, and that was probably an error of judgment of mine as well. But once I learnt more about it, and I started accumulating more, it was time to actually buy altcoins when I thought about it, when I looked at it, because of the way that the charts aligned and how the moving averages were and where Bitcoin was and what was happening in the industry. It was growing. I just wish I had a YouTube channel back then, because I would have reaped a lot of rewards off that. But VeChain, look at it, it's amazing. But I could easily sell that at 100% profit right now. And I'm thinking about it, because I think this will retrace. And like anything that goes up, it comes back down. Now, if that is the top, which it could be, you could be looking at rebuying back in these regions. Accumulation is key. So that's one way you can trade it. But obviously you got margin trading, you got Prime XBT, which I want to mention here. You know, I'm in a small little baby trade here. I'm literally just playing with this to get my risk size back in terms of how it works, because, you know, Prime XBT have given me a little bit of money, as you can see on the reward there. Very, very good platform. I like it a lot because you can trade multiple assets. You can trade Forex. You can trade, obviously, Bitcoin, XRP, Ethereum, etc., EOS, Litecoin. But you can also trade indices as well. So it's really, really good. But ultimately, I'm just testing this at the minute with this money that they've given me so I can get my risk management right. Why? Because it's totally different to anything I've ever used. Because it is totally different and you've got to get used to that. So as an investor, it's fine. Buying low, selling high. Happy days, that's easy. But as a trader, you've got all these different platforms that you can use now. And also, there's like to buy a bit, that's pretty good. But Prime XBT is a real simple one to use that is traditional. A lot of people are coming over from traditional methods such as Forex and going into crypto and getting completely bamboozled because it's quite hard. It's like, God, what? Binance? Huh? Who? What? Coins? Huh? Whereas this, you just put BTC in it and you can trade whatever you want in BTC. It's a lot easier. And as you can see, you know, I'm risking a very, very, very small amount here just to make sure I'm getting my position sizes right, because, you know, as long as the TA is right, cool, happy days, just wait for it to happen. But the fundamentals are, if you have a method and you stick to it and you compound it up, you can make a lot of money. Those profits then can go into investing at whatever prices. Literally, dollar cost averaging is key. Obviously, know what the basics are, the trends, and are we in a bull market, are we in a bear market, all kinds of stuff. But if you continuously compound your trades up and up and up, you may find some interesting areas. Now, what I'm thinking on Ethereum right now is we're going to go back into this box somewhere. I'm also wary of the fundamentals as well of staking and the fork. But what I'm going to say is this. If you keep growing your account by 1 to 2% per day, you're going to see the benefits long term. Risk management is key. But honestly, guys, there's too many people that are thinking, let's just trade. What do they do with the money? Well, they spend it. No. You should invest that money, let it work for you, and make your wealth grow a lot more, a lot further. Certainly what I do. So I hope you enjoyed that. I know I'm going through some old stuff as well. Obviously, it may never ever happen again. May never ever happen again. But if it does, don't be missing out. Don't be missing out because you've been selling at tops when it could go higher. And you've got nothing else in the background working for you or showing that well for you. It's a risky game. So see you next week. Have a good one. Hope it's a pleasant one.